Good evening. My name is Keon Thomas.
My name is Xavier Hill.
My name is Casey Rockamore.
And I'm Justin Cook.
And we are BrickHouse Capital Management. And this is our Portfolio One report. Now, to start it off, BrickHouse Capital Management acquired Caterpillar Incorporated, also known as CAT, on February 8th for a price of $128.11, and it closed at $136.20 on the 15th of February. CAT shares have gone up significantly as of late. The increase in revenues are primarily due to a favorable $23 million impact from higher average financing rates and a favorable $22 million impact from higher average earning assets. These favorable changes are partially offset by an unfavorable $16 million impact from returned or repossessed equipment and an unfavorable $9 million impact from lower lending activity with CAT. This is also due to the success that CAT is having in North America. The profit in North America has been great since last year, but they have had continued weakness in the Latin American markets.
Our next corporation that we bought was Electronic Arts, in other words, EA Sports, and we acquired Electronic Arts on the 15th of February 2019 at $104.87, and it closed on Friday at $106.84. EA stock has been rising over the last week due to the new game released on February 4th called Apex Legends. Apex Legends is similar to Fortnite in that it was a free-to-play game, and revenue is brought in through charging customers in-game, just like they charge people in Fortnite. And that was really one of the things that's the main thing that made Fortnite profitable. And we see that it probably will do the same for Apex Legends, and it has shown a lot of growth in the first week and a half it was released.
And as for a person who has already played Apex Legends, I will say that we have seen some significant changes and also advances that are different from Fortnite. So we also make this a reason why we feel like Apex Legends will be profitable for EA.
Our next company in our portfolio is iRobot Corporation. We purchased iRobot Corporation the 8th of February at $102.64, and on February 15th, they closed at $119.39. So iRobot's 10K report released for the 2018 fiscal year a couple of days ago. On this report, reported revenue was $384.7 million, and compared to 2017's quarter four's revenue at $326.9 million. 2018's collective net revenue was $1.1 billion. That is a 23.6% increase compared to 2017's revenue. This 10K report can be the main determinant to iRobot's 15% increase in a week.
Another company we have in our portfolio would be Broadcom Incorporated. We bought the stock at $217.51. It actually closed on February 15th at the price of $281.93 with a significant return. However, Broadcom is expected to have its growth a little bit slurred and stunted just because as the time has progressed that people have noticed the technology market hasn't become saturated, but more and more people are starting to put their money into the market for various reasons. But regardless, Broadcom is actually projected to still beat its quarter four earnings. And on top of that, it's ultimately, and it's going to increase over time just because of the company that it is, but the expected rate of return is a lot higher than its actually intrinsic value. So analysts are expecting it to grow, but not as much as people are hyping it up to be.
Now, another company that we have in our portfolio is Monster Energy Corporation, and we acquired them on the 8th of February at a price of $57.74, and it closed at $58.72 on the 15th of February. The reason why we decided that Monster Energy deserved to be in our portfolio is that Monster Energy is currently in their 8th season as the title sponsor of the Monster Energy AMA Supercross FIM World Championship Series. Along with that, in December of 2016, it announced that Monster Energy would replace the Sprint Corporation as the title sponsor of NASCAR's Premier Series. In more recent news, Monster Energy released their second video game, Monster Energy Supercross, the official video game 2, on February 8th of this year, in partnership with Milestone, Unreal Engine, and Fled Entertainment. With this in mind, Monster Energy stock has been on a slow but constant increase in stock price, reaching a high $59.31 on Wednesday. With all this being said, and all that Monster has going on and the recognition that they will receive through their multiple sponsorships of action sports and motorsports series, and also athletes, we believe that Monster Energy will continue to be beneficial to our portfolio.
The next company we acquired is Coca-Cola Incorporated, and we acquired that on the 15th of February at $46.12, and it closed at $45.24. Coke has paid a quarterly dividend since 1920, and their payout has been increasing for 55 consecutive years. The S&P's 500 dividend yield is about 2%, and Coca-Cola's yield is currently 3.4%. This is a much better than the market rate, which we think will entice buyers to continue buying the stock and will ultimately help the stock continuously grow over the next few months.
The next company we have in our portfolio is Spirit Airlines. We acquired Spirit on the 8th of February at $61.93, and it closed on the 15th of February at $61.67. So Spirit Airlines intentionally markets towards the baby boomers demographic. Their cost-conscious motto is marketed towards a get what you pay for type of traveler. So for the past 3 months in quarter 4 of 2018, Spirit Airlines have outpaced other competitors in their industry like Delta and Southwest. So we at BrickHouse Capital Management have a positive outlook for 2019 in Spirit Airlines in our portfolio.
Also, we have Accenture PLC. We actually bought Accenture at $155.53, and it closed on Friday, the 15th, at $159.23. Accenture stock is expected to continue growing. It's actually merged in a lot of different, well, at least 3 different companies. One was actually in California. Another one was an acquisition of Obrium. I know they're working on multiple innovation labs throughout the country, and it's supposed to actually spark and help with their technology consulting, which is one of their main focuses. And they're actually putting a lot of, I think, 40% of their assets into technology consulting specifically in order to boost that specific sector.
To no surprise, BrickHouse Capital Management acquired Apple Incorporated on the 11th of February at a price of $171.19, and it closed at a price of $170.42 on the 15th of February. Now, Apple had a big day on Wednesday with their stock price reaching $172.30, but since then, the company's stock has been on a fluctuating decline. Apple generates most of its revenue from sales of iPhones and computers, but those sales numbers have been on a decline. And now Apple is teasing the market with rumors of their yet-to-be fully developed video streaming service. We see this as maybe an attempt to reaccelerate their stock prices, but other investment analysts don't see it having that much impact on the market. We will keep a close eye on Apple as the weeks go on, but we are confident with our stake in this company at this point.
The next company we acquired is Six Flags Entertainment Corporation on the 15th of February at $54.53, and it closed at $54.74. Six Flags had a bad week and has not been doing well lately. Their shares plunged 13% after reporting fourth quarter 2018 revenue of $269.5 million and missing the Zacks consensus estimate of $285.2 million. This is because of a lot of the revenue that Six Flags produces is through their theme parks, and they aren't open right now. A lot of them aren't open right now because of the winter months, but they are set to open next month across the country. We think that that will increase the shares, the stock significantly.
The next company we have in our portfolio is Procter & Gamble. We acquired them the 8th of February at $97.26, and it closed on the 15th of February at $98.48. So we have a positive outlook on Procter & Gamble because quarter 4 and quarter 3 of 2018, their increase in sales was at 4%. Procter & Gamble has an extreme lion's share of the market when it comes to consumer goods. We believe they will continue gaining more market share while raising prices, which will in turn increase margins. Procter & Gamble is a notable company, and we have a positive outlook for 2019 with them in our portfolio.
Also, we have NVIDIA Corporation. We bought them at we bought stocks in that company at $146.89, and as of Friday, February 15th, It closed at $157.34. Although this is actually a really good increase in price, NVIDIA actually has a class action lawsuit against them, and it's not in the best interest in terms of public image. However, their quarter four earnings were extremely significant, really blew out the waters for the rest of the year, and they're expected to actually have the same momentum coming into this new year. And so we'll actually be really interested to see where NVIDIA goes to next, but we're definitely watching the index and trying to see how NVIDIA stock sways.
Another company that we invested in, Becton, Dixon & Co., and we acquired them on the 11th of February at $243.62, and it closed at $248.34 on the 15th of February. And throughout the week, Becton, Dixon & Co. stock prices have been up and down, but with the consistent theme of increasing and has yet to drop below the price we have bought it at. Franklin Lakes from PR Newswire announced Friday that Becton, Dixon & Co. will present at Leerink Partners' 8th Annual Global Healthcare Conference on February 28th. And we see this as a great opportunity for them to impress potential investors and solidify shareholders' thoughts toward the company.
Our next company is Sony Corporation. We acquired Sony on the 8th of February for $44.28, and it closed on the 15th of February at $45.79. As you know, Sony is a diversified electronics and entertainment company based out of Tokyo, Japan. The company manufactures image sensors, PlayStation video game consoles, mobile devices, and consumer electronics, and mirrorless and professional cameras. It also operates the Columbia Film Studio and Sony Music Entertainment Group and holds majority ownership of Sony Financial Services. We expect growth opportunity in the image sensor and game business and operational improvements in the consumer electronics. It's held steady so far, but we expect growth over the next couple of months.
The next company we have in our portfolio is Canopy Growth Corporation. We acquired them the 15th of February at $48.26, and it closed on the 15th of February at $47.56. So Canopy reported a sky-high increase in net revenue at 283% gain, but this growth can be stemmed from initial sales of recreational pot in Canada. So we have a positive outlook on Canopy Growth Corporation because Canopy and another company called Aurora Cannabis have the lion's share of market share in the Canadian pot business. So although the marijuana industry can be very volatile, we want to take a risk and see if they can give us some net profit over these next couple months.
Stryker Corporation, we actually bought it at $183.72, and as of Friday, February 15th, it closed at $186.83. On Valentine's Day, it was announced that Stryker was actually one of the top 100 places to work for February, which is really great for its image. And approximately 35% of its earnings actually come from outside of the United States, so it's actually pretty well diversified in terms of like global aspect and that kind of like perspective of the company. It's definitely expected to have a steady growth over time. It's not really too volatile and everything, but it's a company that I think will be a good stronghold for our portfolio.
Okay, we have reached the end of our Portfolio One report. Again, we are BrickHouse Capital Management, and we would proudly like to say that at the end of week one, we are the leading investment management company, and we will continue to be the leading investment company as weeks go on because we will continue to work as a team, take well thought out risk, and really embody what it means to be a part of BrickHouse Capital Management.
BrickHouse.